Well, David, I was driving in here this morning to record the show, and the news was crackling with the CPI. And here's a headline from Investors Business Daily. CPI inflation too hot. Even before Trump tariffs, S&P futures tumble. What's going on with CPI, David?
Well, ironically,
the Consumer Price Index, of course.
If you remember right on this show, I said a couple weeks ago, we're going to see CPI hit 3% or slightly over it. My prediction was actually 3.04, and I think it was 3.03. They round down, so they report 3.00. Well, Wall Street was expecting 2.9. And year over year inflation, core inflation, was actually almost 0.2 hot at 3.3%. So inflation is now back above 3% officially, first time. So you got to go all the way back to last June, Chip. Well, I thought we had squashed inflation, right? And that does not seem to be the case. And if people and economists want to believe that some of these tariffs will be inflationary, what does that bode for the future? Well, if you were to Mohammed El-Iran, who we've quote many times on the show, he was actually this morning on one of the news shows, and he was talking about if the Fed was serious, you'd be seeing a rate hike immediately here, literally. But, of course, they're just going to say, hey, we're just going to pause for longer, which was the message they gave earlier in the week, and that's probably likely. And now the futures market has priced out the likelihood that we get a Fed cut at all this year. So, that means higher rates. That's not good news for the housing market. As we've seen, mortgage rates are still hovering up there close to 7%. But anyway, all this is not great data. And then we had a jobs report come out that reported, hey, unemployment's down to 4%. That's weird, Chip, because they only added 143,000 jobs when we were expecting 260,000.
I think 169,000. Yeah.
And so that was a pretty big miss. And yet participation rate went down. So therefore unemployment went down. Again, do you believe the numbers? Can you trust the numbers like we used to in the old days? People are questioning that now, but it doesn't feel like a rosy job number. It sure doesn't feel like 4% unemployment out there, and we have job cuts being announced every day from major employers across the country still.
Well, and before we leave the CPI, I just want to get your take on this. David Russell, a Wall Street analyst, says time could be running out for this bull market if we don't see progress on inflation soon. Yes,
yeah, and so, yeah, that's absolutely. We've talked about this. I think the best case scenario is we can trade in a range here. On the S&P, that would be likely 5,800 on the low side of the range to the top side around 6,100, give or take. And, that's a 4 or 5% range that the market could just kind of wade back and forth over the next 4 to 7 months or so, where it gave the economy a chance to catch up, the company's earnings to catch up. But if the earnings slip, if inflation is eroding their profits, and that's what inflation does, and it erodes your spending power, therefore you can buy or consume less of those products, then the earnings would have to be revised significantly lower. And if that happens, stocks typically follow. So the likelihood of the market, falling significantly lower is getting higher by the day. Now, we don't know when. We're not trying to prognosticate or predict that, but we want people to be prepared. Do you understand what it means if we were to? So if we break out of that range, like 5,800 or so on the S&P, you could quickly be down around 5,300 to 5,400 in a blink of an eye. 2-3 trading days, that could literally happen because these technical levels are very real by big institutions. And when they breach, they hit the sell button. They don't ask questions. And so just be prepared for some increased volatility this year.